It's Anthony with Land Title. I came to bring you your Boulder County market update. So, in all this big information, I wanted to break things down for you, detached and attached today, because there's some major differences and discrepancies that are starting to take place in the market as we kind of transition in this higher inventory environment. So, if you look at this year over year in the detached market, 25% more active inventory. We've sold 33.3% more year to date in detached than we did this time last year. Now, they're not all created equal because if you look at the average sales price and a few other things in here, you can really start to pull out some of the nuances. So let's kind of dive into that a little bit. Before we do that, though, look at the attached markets. We went from 25% increase in inventory in detached, 56% increase in inventory in attached, with a reduction in solds. So we've sold 4% less sales in the attached market and that huge increase in the detached market. So we're starting to feel the two markets kind of drift apart a little bit. So what does that mean for the market? Well, let's kind of look into that a little bit. If you look at the active units of inventory, what it really means is certain markets are going to way outperform others. So markets like Erie or Longmont or even Lafayette in many ways, we have a huge increase in total sales. If you look down in the year-to-date column, you can really see some of those major changes. Now, in the city of Boulder, we have a lot more inventory in the market, right? In other places, it just hasn't even hardly moved. So when you see that, what it means is buyers have changed their behavior, but people are actually bringing property to market because of those three Ds: debt, divorce, and deaths, that really force people to go to market. And they maybe have waited so long that they're just frustrated and they get things on the market anyway, even in a time where interest rates really haven't changed much, right? So a lot of people were waiting for the ball to drop. It's not dropping. So the sellers are coming to market first in many cases. And you can see it here. Last year, we were at 2.6 months of inventory across the county, and now we're at 3.3 months of inventory, almost 3.4 months of inventory. So it's a little bit more like a balanced market right now than it has been in the past, but it is definitely not created equal, right? You have Boulder at almost 5 months of inventory because of the price point, and Superior and Niwot also close to 4 months of inventory. Look at the rest of the county. We still have a seller's market in places like Lafayette and Erie and Longmont, right? All under 3 months of inventory, kind of in that position where, the seller might have to negotiate a little bit, right? They might be a little bit more on even footing. The seller might even control more of the negotiations if they get a couple of offers. But as that starts to shift with this increasing inventory across all areas, we really need to be mindful when we're talking to our sellers about what to expect. But if you are working with buyers, go get your buyers and get them into the market now, because there's some serious opportunity starting to present itself. You can see it here in the days on market too, where we're about to the fastest point in the market. Every year, May or June is kind of the peak, and it's going to start to slow down from here. So 33 days in MLS is not all that bad, but being that this is the peak of the market, it is fairly slow. We talk about 1 month to go under contract. Certain markets like Superior were 13 days last month, right? The median is probably closer to more like 15. So a lot of times when you see that, certain markets are lagging a little bit longer. Erie at 48 days because you've got a lot of inventory out there. Longmont, 40 days, kind of surprising because things seem to be moving relatively quick in the lower price points in Longmont, but just like everything else, it all kind of shifts at different paces, right? So let's take a look at active and sold by price range. It is a good thing to see a lot of our luxury market is doing well this last month. We did have a lot of sales up above 2 million. The one that's lagging behind quite a bit is that 2.5 to 3 million range. But even the 3 million plus range appears to be fairly similar to where we were last year. 2 to 2.5 million, up 29%, 1.5 to 2 million year to date, 57% increase in solds. So we are seeing more homes sell, right? People do want to live here. It's a resilient part of the market. But the hard part is people are buying and selling only what they really like, right? So if it's not buttoned up and it doesn't look good, it seems to be sitting a little bit more. You can see it here. So I broke this one out by detach and attach for you so you can see the differences, because as the two markets start to divulge in the latter half of the year, you're really going to see, if you're under 800,000 in the detached single family home market, it's super competitive. It's real tough to get a house. Things are moving super rapidly. You might be experiencing bidding wars because 1.7 months of inventory just isn't enough inventory for the buyers even that are out there now, and they're moving fast, right? 18 days, look at that, 500 to 599. That's a quick pace to go under contract. Now, if we get over to the attached market, even in the lower price ranges, is at 3 months of inventory, pushing into the 4, 5, 6 months range on the upper part of the market. And obviously, the luxury market is a very different animal. So we don't have to talk about that too much here. But you can see just the complete different shift in inventory range, right? Yes, people are being forced into attached if they don't have the money or the funds for it, and they like to be in the same area, but it looks like they're sacrificing location rather than moving from detached to attached, which explains why places like Erie and Lafayette and Longmont are doing remarkably well in the detached market. So take a look at this average sales price by detached or attached. The detached market, let's just look at the trailing 12-month numbers. If you look at the market as a whole, we're down about 1%. We're selling a little bit different product type here, but if you look at by market, look at some of these. Louisville up 5%. We got Niwot up 4%, Longmont up 4%. A lot of the rest of them are very stable, 1 to 2% increases. Lafayette's down about 2%, which could be a little bit of a hangover from the Marshall Fire buyers and sellers. We're still kind of seeing some of that take place where people purchase out there and maybe are trying to transition back. But either way, this is a really healthy environment for our home buyers and sellers, right? So, but look what happened in the attached market. The attached market is all over the place. The city of Boulder has major swings because of big product, really high expensive stuff, really cool things that get released. So, I mean, you can kind of take that one with a grain of salt, but it's actually gone down about 8% in average sales price. I don't think it means that the price of housing has gone down by 8%, but we're just selling really different stuff in the attached market than we have before. Louisville, take that with a grain of salt. There's just hardly any there. So -9% is kind of here nor there. But then you got places like Lafayette, desirable place to live. Longmont, desirable place to live. They're up 4 or 5%, a lot like the detached market. Erie is showing -1%, but not a ton of attached product there. So really, this one is kind of interesting to dive into. Don't just send this off to people. Really have a conversation about it first. Understand what we're talking about. The big difference and the big shift here, why this is happening, is look at the detached market. The detached market is soaring. 33% increase. You can see every single month we've way outperformed the other part of the market, but it is the more affordable part of the inventory that seems to be moving. But honestly, even in the city of Boulder, we're moving up to 2.5 million pretty well. So this part is moving. The attached market, you can see that it's even lagging behind last year just a hair. We're kind of slow to the race on the attached market. So the attached market is settling. The detached market is booming, which means that once we have a lower interest rate, you're really going to feel the pinch. But until then, there's a surge of opportunity right now that I think we really need to be mindful of, because as inventory is coming on the market, especially in the attached market, from what we can tell, there's actually going to be a lot of opportunity here to purchase property. Now, the big difference is attached and detached I separated because they seem so different here. But in all reality, it's fairly competitive, right? You can see 800 to a million, over 100% last month. A lot of this market looks pretty good. That 3+ million mark that sold, we had 11 sales in that part of the market. It's down to 93%, which is kind of what you would expect with that much inventory in the market. Honestly, I'm kind of surprised not a little bit lower than that even. But that being said, lots of inventory. We still have some buyers. It's a good sign. The rest of the market, though, is still very competitive. But if this is the peak, which it usually is in May or June, then we're going to start to see this trickle off a little bit. The attached market is actually doing a little bit better than the detached market. So the ones that are selling are very desirable, obviously, because people are paying, close to asking price for them. Now, that's also going to kind of lose its luster here a little bit because buyers tend not to spend as much time purchasing in Q3 and Q4, and it's going to slow down just a little bit. But that being said, there's a lot of opportunity with stuff sitting on the market that isn't getting calculated into this. So if you got investors or people like that, definitely hit them up about looking at stuff that maybe is sitting on the market a little too long, because I think there's definitely some deals to be had out there. If you have any other questions, I'm Anthony at Land Title. Don't forget to reach out if you need local market data, anything like that. Hopefully we'll see you next time. And don't forget to like and subscribe to the video. Bye.